Hello and welcome. My name is Simone. I'm an accountant and a financial analyst, and today I will discuss the chart of accounts. In relation to the chart of accounts, I prepared two different presentations. A first video of introduction and this practical example. In relation to the previous video, for which you will find a link at the end of this presentation, I give you a definition of a chart of accounts, how is structured a chart of accounts, and what are the advantages of a well-structured chart of accounts. Instead, today, I will show you a practical example. Before to go to the practical example, I only take two slides from the previous presentation. And I start with the definition. A chart of accounts is a structured list of all the financial accounts used by a business to record transactions and organize its finances. So the chart of accounts is a list of code that an accountant uses in order to record transactions inside the accounting software. This list of code becomes an essential tool inside the accounting software because it's linked to the two main documents of the financial statements. So why is the chart of accounts a structured list? The chart of accounts is the list of code that an accountant needs in order to record journal entries. And what is a journal entry? It's a recording inside the software where an accountant translates into numbers the business transactions that happen every day. And in relation to this, I will prepare a video, so please subscribe and you will be notified that this video will be available. If we consider a period of time, we have the trial balance, which is the starting point to prepare the balance sheet and the income expenditure. So the chart of accounts is directly linked to the balance sheet and the income expenditure. Therefore, it is structured in a way to mirror these two documents of the financial statements. And I will show you now in the example that I prepare. So I'm inside Excel and this is the example that I prepare for this presentation. So as I said, the GL codes part of the chart of accounts are divided into two big groups. The GL codes that are part of the balance sheet and the GL codes that are part of the income expenditure. So in general, the GL codes that start with number 1, number 2 and number 3 are going inside the balance sheet and they are called permanent accounts. The GL codes that start with number 4 and number 5 are going inside the income expenditure and they are called temporary accounts. So the distinction between temporary accounts and permanent accounts is very important where we are going to year-end and closing entries. As this is an important discussion in an accounting point of view, I prepare a specific video also for this. So I explain my chart of account started with the asset. What is an asset? An asset is what the company has in order to carry on its business for a long period of time or for a short period of time. In this situation, I have buildings, machineries, office equipment, and vehicles that are assets that stay inside the company for a long period of time in order to support the activities. And every year, an accountant reduces the value of these assets through the depreciation process. For this reason, below the main GL code, you find its contra accounts, which is working on the opposite side of the main account. And also for this, I will prepare a videos. So please subscribe and you will be notified when also this video will be available. In relation to the current asset, usually the GL codes are listed based on liquidity, from the more liquid to the less liquid. So usually we start with the bank and the cash. In general, a company may have many bank accounts, so you will see many GL codes. After bank and cash, we have account receivable and its contra account. With the number 1 free, I insert the inventory. Not all companies has inventory. Usually the production company has inventories, and you can see the GL codes inside their chart of accounts. With the GL code 14, I insert 2 typical accountancy GL codes. What I have not inserted in this example are the immaterial long-term asset. And the reason is because the immaterial long-term asset are quite complex accountancy discussion that I have not inserted for this basic introduction. With the GL codes 2 and 3, we have the GL code that explain how the company finance these assets. So we have liability and capital, and we have short-term liability and long-term liability. And I believe that already from this presentation of the chart of accounts, you already understand which is of the main analysis that the balance sheet offers, which is its financial solidity, and also the liquidity analysis is essential inside the balance sheet. With the GL codes number 4 and number 5, we have the income and we have the expenditure. So this is quite basic GL codes. However, companies with many business units, they use subcategories, these GL codes. So you will see a lot of more complexity. So this is the example that I prepare for this presentation, and I hope that with this example, along with the previous videos for which I will give you the link at the end, I hope to support you better understand of the chart of accounts. So thank you very much for watching my video, and we see you to the next presentation.